Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. Hello again, fellow BeachBum traders. Let us be one of the first to wish you a very happy Thanksgiving holiday weekend, and welcome to our weekly trading game plan for the Thanksgiving holiday week of November 22nd through the 26th. We want to give thanks for all the opportunities we have to make money trading, and we also want to give thanks for all of you fellow BeachBum traders, and thank you for joining us today. So let's prepare our weekly trading game plan for the week of November 22nd through the 26th, which is the Thanksgiving holiday week. Please note, markets are obviously closed on Thanksgiving Day, Thursday, November 25th, and the markets close early at 1 p.m. on Friday, November 26th. So we have a half day on Friday, closed on Thursday, and you can find the holiday calendar quickly and easily on investing.com. There's holiday calendar, and I will put this link in the description box below for your quick and easy reference. So let's dig into some of the themes and strategies that we want to prepare for in part one of our weekly trading game plan. First, let's talk about how does Thanksgiving week and Black Friday, and we'll even talk about Cyber Monday, how does that affect stocks, and how do we want to prepare for the Thanksgiving, Black Friday, and then Cyber Monday weeks. So I found this article in Investopedia.com, and I will put a link to this article in the description box below so you can read it in more detail. But we'll just summarize and look at how do the Thanksgiving and Black Friday typically affect trading in the stock market. So you can see Black Friday, if you're not familiar with it, it's the Friday after Thanksgiving. It's called Black Friday because that's typically when retailers go from red to black. They start making a profit as of Black Friday, or that it was historically how it was. So we'll see if that turns out to be true this year. You can see, it's all about retail. They're talking about, is this a predictor of the fourth quarter for retailers? If retailers don't meet expectations on Black Friday, that could be a negative signal for both the economy and retailers. Again, they tell you, Black Friday's when retailers went in the black. Biggest day of holiday shopping traditionally. And then Cyber Monday is kind of a newer thing where with online shopping, when that became prevalent, when people went back to work, they did their shopping online from work. So again, this is a signal of online shopping sentiment. So, and you can see a key takeaway is if they get strong retail sales, it can benefit the retail sector, and if they report strong sales earnings. So, however, this doesn't necessarily affect the overall market. So, it'll be focused on retailers, not necessarily the overall market. We've got some statistics. Cyber Monday, when people go back to work and shop online, and then it's unlikely to be affected by Thanksgiving alone. So again, particularly strong or weak Black Friday through Cyber Monday has a big impact on retail stocks, but not necessarily on the broader market. So a couple questions that I wanted to pose and something to think about as you listen to the data that comes in from the Black Friday through Cyber Monday weekend is, are consumers going back to shopping in person, or are they continuing to shop online? Obviously, that will sway where the money is going. Is it going to in-person stores, your Targets, your Walmarts, your Ross's, TJ Maxx, etc., or are people continuing to shop on Amazon? Um, Obviously, if they're going back to in-person retailers, that would benefit those companies and stocks. If they're staying online, it would benefit the shop online stocks. So it may have some impact as to, okay, going forward for this year, who's going to have better earnings, who's going to get the money flow, is it in-person stores or online stores? Again, if people are going back to in-person and leaving shopping online, then the tech sector might decline a bit. So that's something to listen for and think about. Also, what you want to listen for is, okay, who's the most impacted or the least impacted by supply chain issues? If you hear outages, out of stock, inventory issues, disgruntled customers because they can't get what they want, obviously that's going to have a negative impact on those companies and those stores and their future earnings. If you don't hear that and a company is doing well and their inventories are in good shape, then they may benefit and do better going forward. So that's kind of, again, I'll put a link to this article. You can read it in more detail, but that's kind of what we can expect from Thanksgiving and Black Friday week. Okay, now again, I want to use Jim Cramer's CNBC Investing Club email that I got late Friday at 4 p.m. As a quick review, what we learned from last week and their strategy for next week. I'll include I found I can get this on a browser. Go to the web page, view in the browser from the email. If you're not getting these emails, you can sign up to get these emails. It's all free. You just go to cnbc.com Investing Club. I'll put a link. I probably won't put this link in the description going forward. I'll just view this recap in the browser for our game plans. I think it's a great review, and then we can add our commentary going forward. So if we just quickly scan through this, again, I'll put the link to this one in the description box. You can read it in more detail if you're not getting the emails. And again, I'd highly recommend that you get the emails because you will get daily reviews as well as their trades before they make them. And some earning recaps, etc. So I highly recommend it. I find it very useful. So we can see S&P edged higher. We'll see this in the graphs and the futures. NASDAQ hit a new record high. We'll talk about what we're going to do with that. And that we see the Dow start to roll over a little bit. You see renewed lockdown fears. This is something that will be interesting to see what the impact is. It didn't seem to have a major impact on Friday, but again, we will see if this turns into more of a lockdown theme or not. So you can see his strategy. He's not going into lockdown mode. They talk about a barbell approach, kind of some reopening, some lockdown, etc. So, and he mentions under the hood, consumer discretionary and tech were the strong sectors. Energy really declined, and it was the largest drag, and then financials. So we see the dollar was very strong. We're again going to see all this in the futures. We saw gold push up to mid 1800s. It may be rolling over. We'll see that. Oil really took a dive. So, and again, we'll talk in a second about the reasons for that. And the Treasury was a little bit erratic. We'll talk about what's going on there and how we can play that. So retail sales, here's the economic data. Retail sales was strong, consumer discretionary, etc. Again, you can read the details. And retailers did well. And we'll talk more about the Federal Reserve and some of the potential changes in their stance. And inflation is still a major theme. Inflation is still hot. And again, talk about how we can continue to play that. And again, all these indicate that inflation is hot. Housing, and then jobs. It was a bit mixed. You can see in here it was a low pandemic low, but the numbers seem a bit mixed. If you go to the investing.com economic calendar, you'll see some beat expectations and some missed expectations. So it's mixed, and the Great Resignation theme is a very strong theme right now. Again, they're talking about labor shortages, lots of jobs opening in the delivery services. FedEx, UPS, Amazon, etc. have tons of jobs they're trying to hire. Will they be able to get enough people, or is things going to be late? And are they going to have to pay excessive wages to get people? So listen for those. They're already talking about how many people they're trying to hire. The question is, will they be able to get them, and at what price? So you can see earnings. Earnings season's winding down. You have probably seen in the market that earnings matter right now. Not only earnings, but guidance. So if someone misses earnings, they get punished. If the guidance going forward is not as good as people are expecting, stock gets punished. So if they excel, it goes up. The money flows into those areas. So it's very important to continue to listen to earnings and know when the earnings on your positions are going to be reported. So you can see highlights of the economic data we're going to get Monday, Tuesday, Wednesday. We get jobless claims on Wednesday, sentiment on Wednesday. That may have a bit of an impact on the Thursday close, Friday 1 p.m. close. Okay, so next we'll talk about some of the trends and how we want to position and strategize to take advantage of those trends. Okay, I want to quickly go over the information we can see in Finviz as of Saturday, November 20th. We'll look at the close from Friday the 19th. I'm on the Finviz home page. You can find our affiliate link to Finviz in the description box below. We can see Dow closed lower, NASDAQ a little higher, S&P a little lower. Again, we'll see also in Webull more decliners, more new lows. We can see the heat map. Some of the tech held up, the big tech, FANGs held up, but there was a lot of red. So here, the only other things I wanted to highlight is there's talk about the lockdown, European lockdown. And what impact that may have, and also we can see a brief glimpse of the futures. We see oils continue to decline. Nat gas kind of went up and it's stable at 5. We see gold maybe rolling over. We'll see that again. And we can see the 10-year treasuries at 1.5. The 30-year is at 1.9. So if I jump over really quickly to the futures, we'll see similarly, Dow Jones, looks like it rolled over a bit. S&P looks pretty flat, consolidating, and then the NASDAQ kind of broke out and up. And we'll talk about how we want to play that when we look at the detailed chart. The indices got higher volatility at the end of the week. It's sitting at 17.9 right now. It didn't really spike to the 20-ish area, but it is a little elevated. Friday was options expiration, OPEX date, so higher volatility was expected. We discussed that last week, so it's not surprising. Again, we could see oil rolled over. Part of the reason for that, and we'll talk about it again in a minute, is Biden is talking about working together with China and other foreign leaders to release oil from their strategic petroleum reserves, or what's called the SPRs, and I believe that had an impact on the oil prices. We see gas also went down, etc. Natural gas seems to have gone flat, indeterminate whether it's going to spike back up or not. And again, we can kind of see it, gold may be rolling over. And as part of that realization, if you've been around for a while, you know we're long GLDI, which is ETN, Credit Suisse ETN that pays monthly dividends. So if gold is rolling over, we put a break-even stop in our GLDI position just in case, so that if it does decline, we'll break even on that. We've collected dividends for months on it, which is great, and then we'll just buy it back lower. So gold might be rolling over at this point. Silver as well, and we also have a position in SLVO, but it's not yet break even. So if it does make break even, we'll do the same thing with silver. The treasuries, again, we saw some erratic behavior in the treasuries. It's kind of strange because we know the Fed's going to taper. There's talk of them accelerating their tapering. We'll talk about that again in a second. So there's going to be less demand, but the prices went up. And the yields went down, and because of that we took profits in our TTT position. When the prices pushed up, yields pushed down. If we do get another peak in the yields, if TTT bottoms again, we will go long TTT again, because I think the long-term trend is higher yields, lower prices, because again we know the Fed's going to taper, and they may be accelerating their tapering. So I guess while we're here, I can talk about that, those facts. So another thing I wanted to point out is it is a holiday week. It's closed Thursday, open half a day Friday. Be prepared. People are already starting to go on vacation. They'll be traveling. They're thinking about the holidays. They're not thinking about trading quite as much. So be prepared for a decreasing volume. May or may not be more volatile, just because of the lower volume. Everything we saw, says inflation is still hot. So some of the inflation hedges, obviously precious metals, gold, silver, etc. There's some discussion that cryptocurrencies may not really be an inflation hedge. That's a debate. I'm not going to go into that, but that is a debate going on. And we talked about the treasuries, and there were a couple Fed officials that came out, and they're talking about accelerating the tapering. So we just talked about the treasury yields going down, which was strange, and the prices going up. Again, it'd be interesting to hear some commentary and your opinions. Please put your opinions in the comments below about any of this, as to why you think treasury prices are going up and the yields are going down, even though we know inflation's higher, Fed's tapering, etc. So Bullard talking about increasing the rate of tapering, and then Friday we had another Fed board Governor Waller. He was not only talking about accelerating the rate of tapering, he was also talking about accelerating rate hikes and then contracting the balance sheet, which seemed to imply they might actually be selling bonds. So that would definitely put downward pressure on the bond prices. So some of the other trends that we're going to see and talk about is supply chain issues persist. You keep hearing in the earnings reports they missed because of supply chain issues and they got clobbered. It seems like the market's getting tired of that as an excuse, and companies are being punished if they have bad earnings because of supply chain issues. So continue to think about companies that are going to have ongoing supply chain issues and might report that in their earnings, and you might want to trade accordingly. We saw the fourth week of growth in crude oil, and then, as I mentioned, Biden's talking with China and other leaders about releasing oil from their strategic petroleum reserves. So right now that's a downward pressure on oil prices to the point where if oil bottoms, we might look at going long oil. The long oil ETF is Gush, and the short oil ETF is Drip. We've done a lot of scalping on Drip, made good money. I know other people did last week as well when it rolled over. But we'll see. If oil bottoms, we may go long oil because we know U.S. oil producers are not investing. They're not opening up their oil, and the Saudis don't want to increase their production. So we don't see supply increasing a lot, and demand is not decreasing. So another thing I want to point out again, like we did last week, is I believe we're starting to see, and I'm hearing talk of end-of-year tax loss selling is already starting. Again, I think people are starting to think about the end of the year, they're planning for it, and they're starting to take action. So if you are looking at a stock or you have a stock that has significantly down this year, just be aware it may continue down because people are taking their loss as a tax write-off for this year against gains that they have. So again, you may see things that are down continue to go down through the end of the year. At some point that tax loss selling lets up towards the very end of the year, and then a lot of times those big losers from this year become the outperformers for next year. Some other news from this year is the infrastructure bill got signed. The 1-point-something trillion bill, infrastructure bill got signed. So, but it's going to take a while for that money to flow into those companies, and I think that's already baked into most of those companies already. And then the $2 trillion Build Back Better bill passed the House on Friday. And it's going to the Senate, and they'll be talking about that, and you can listen to the details of what's in and what's not in. But bottom line is, if it passes, there's another 2 or some number of trillions of dollars of money getting dumped into the economy, getting printed. All of this means devaluation of the dollar and increased inflation. And it sounds like people are starting to catch on to that. So you hear all these signals are increased inflation. You don't want to be in cash. You don't want your money in savings. You want it invested in something that is going to be resilient to inflation. And stocks is something, if you're in the right stocks that go up as inflation goes up, then that's a good investment, right? Again, we talked about the bond yields and the fact that the curve is flattening, and we'll see kind of how that goes. So I do want to jump over and look at the data in Webull, and then we will talk about any other strategies we want to take advantage of for next week. Okay, I wanted to take a real quick look at the details on each of the indices just so we can see where they're at relative to their trend lines in their channel. We can see the SPY is near the top of its channel. It's not quite at the top trend line. It's kind of hovering there. So it's pretty indecisive. We can see it's above its moving average. So again, we might have further upside in the SPY, or it could roll over. The Qs is the one that I'm particularly interested in because we had a short breakout. It trended up, hit the top of its trend line, broke out a little bit. At this point, we went long SQQQ, which is the short on the Qs, leverage short on the Qs. Any kind of correction, any bump, etc., it's a good hedge. We're looking at that as really a scalp. So any kind of downturn on the NASDAQ, on the Qs, would be positive for that long in SQQ, and we would scalp that off at that point, because again, the long-term trend is still up. It just seemed a little overextended. It made that breakout. I wouldn't be surprised if we got a brief retracement and we can profit from that using SQQQ. IWM, the Russell, we can see it hit the top of its trend line and bounce down. Surprise, surprise, right? We see that kind of behavior in a lot of these indices. They're bouncing up and down in their channel between their trend lines. So again, not surprising. Again, if we talk about the SPY, it wouldn't be surprising if it went up to its upper trend line and bounced down. We see the elevated VIX. So you kind of see, you know, and that's what we're looking at. Again, we're now short the Qs, looking for just a brief correction. We'll scalp that off, take profits, and then adjust accordingly. So I hope that helps. Okay, now I'm on the Markets tab of the online browser version of Webull. As always, you can find our affiliate link for Webull. Get 2 more free stocks with your copy of Webull in the description box below. We also have a much more detailed video on how to use all the information in the Markets tab in Webull. I will leave a link to that video, and I'd highly recommend you see that video and dig into this markets information. There's a ton of information. I'm going to try to go through it very quickly just to look at the current state for last week and what we can see for plans for next week. So again, we can see the state of the indices. This histogram I thought was very interesting and useful because it shows the decliners, and you know, there's a large group of just small decliners and then trailing off. But we can kind of see that downward pressure there. The net inflow also was interesting because we saw that the inflow to the New York Stock Exchange went negative. The NASDAQ was kind of flat, but that says there's outflows from the New York Stock Exchange, and we saw the decline in the Dow. So I thought that was interesting as well. So you can see top news, it looks like it scrolled off, but I also saw a blip that China was fining Alibaba and Tencent again. Again, as you know, we're not even considering Chinese stocks anytime soon, and that should put pressure on the FANG ETF, and we are long FANG D, waiting for that to profit. If we look at the top gainers and losers from after hours on Friday, again, we can kind of, there's some oil jumped after hours. That's surprising a little bit, but that's almost kind of a meme stock. CEI. Top losers, I don't see a real strong trend offhand. Maybe you do, please let me know. We can see the earnings calendar. You can see who's reporting on Monday. And then we can see the best performing industries. Renewable solar seemed to take a positive trend late Friday. That was positive, interesting, could be part of the infrastructure bill. And then there's, you know, EVs kind of settled down, but there's still some positive sentiment in EVs. Again, you can see all of these sectors by hitting the all button. Scroll through them very quickly. Get a feel for the trends. Semiconductors, it looks as cooling off, and again, we're long stocks. That's a kind of a long-term hold for the cyclical themes. We know semiconductor shortage is still a big theme, but eventually we think it'll turn into an oversupply as people overorder, etc. So again, that's a long-term theme that we're playing, long-term swing. So freight, that's not surprising. Okay, so if we go back and look at ETFs, Again, I think this section of the market screen of Webull is great for getting a good quick feel for what's moving, what's positive, negative. Okay, so we can see down on the Dow, down on the Russell, S&P down, NASDAQ still up, VIX up, right? So we can go to industries, look at them all. Utilities positive. Pretty much I think everything else is negative. Yep, it looks like everything else is negative except for utilities. So that's kind of a defensive dividend type sentiment. We look at commodities, aluminum, natural gas are positive. So hey, maybe we'll get a pop in natural gas. If we do, we will short the top on natural gas using cold, K-O-L-D. If nat gas were to bottom, we would long it using boil. So again, positive natural gas, positive softs, that's probably cotton. And then we see long duration treasuries, so that's kind of interesting. And again, there's the TLT, so they're putting money into the TLT, that's driving the price up, yields down. So again, we're going to wait for the top before we make a move using TTT. I wouldn't go long TLT right now because again, we know the Fed's tapering, reducing demand, and that should drive the prices down. So hopefully that gives you a good feel for the state of the market, the trends, what kind of other trends we see and hear in the markets, so you can start picking your stocks to put on your watch list, which we'll do part 2. We'll tell you about what stocks we're adding and removing from our watch list and our strategy, price targets, etc. for playing those stocks in part 2. We hope you liked part 1. Please give us your comments in the description box below. Please smash the like button, and if you're not subscribed, please subscribe so that the YouTube algorithm starts showing our videos to more of your fellow traders, and we can build our BeachBum trading community for the benefit of all of you BeachBum traders. So please share this. We want to grow the community, and everyone benefits from helping each other out in the community. So we appreciate you. We appreciate your time. Thank you for sharing your time with us. We hope you take the opportunity over Thanksgiving and when the markets close to spend time with your family, to decompress, revitalize, re-energize yourself. Take some time to learn, study, be a voracious student of trading. Watch videos, read books, study your trades, improve your trading for the weeks going forward whenever the markets close, weekends, holidays, etc. I know sometimes you get edgy because the markets close. We wish we could trade, but there are opportunities to improve your trading when the markets close, and automate your trading tasks. Think about, okay, what are you spending time on that you could automate? Eventually I'll do some more videos on what we've done to automate our processes, and we'll share some of those tools with you. Anything that can make you more productive, more profitable is to your benefit. And again, we want to wish you all a happy Thanksgiving holiday. We appreciate all of our BeachBum traders. Thank you again for joining us. We hope this all helps. Good luck. Have a great trading week and a great Thanksgiving. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.